A unit trust is a popular way for everyday investors to pool their money into a professionally managed portfolio. Let us break down how it works. At its core, a unit trust is a collective investment vehicle. Many investors contribute small amounts to create one large, powerful pool of capital. Because the fund is managed by professionals, you do not need to spend your time picking individual stocks or monitoring market trends yourself. By buying units, you gain instant access to a diversified basket of investments that might be too expensive to purchase on your own. While unit trusts are similar to exchange-traded funds, they often differ in how they are managed, traded, and priced throughout the day. It is important to remember that professional management comes with costs. Always review the management and administration fees before investing in any fund. Keep in mind that while these funds offer diversification, they do not guarantee a profit and carry the same risks as the underlying assets. Always read the fund prospectus to understand the specific risks and objectives. Thanks for watching, and remember to keep learning about your money.